The digital asset market is shifting from speculation to real utility. Payments, tokenization, and enterprise use cases are gaining traction. Now, developers are selecting Solana for speed and predictable costs, while the industry is focusing more on standards, tooling, and compliance. Well, joining me from Solana Breakpoint in Abu Dhabi is Hess, founder of Metaplex, and also former Solana head of product. Stephen, thanks so much for joining us as Breakpoint gets underway. So first, tell us why institutions and developers are turning to Solana for high volume applications.
Hi, Remy. Good morning. And ultimately, Solana provides the fastest platform for international markets to meet. And we're in the middle of a complete restructuring of the way that global capital is formed and early stage technology ventures are able to capitalize and be built. And so Solana provides not just an incredibly networked technology with over $15 billion worth of stablecoins on the platform, but the ability for anyone with an internet connection to plug in and participate in these markets.
And as we wrap up a year packed with momentum, tell us what's been driving growing interest in tokenization, as well as stablecoins and also enterprise adoption.
So ultimately, the promise of internet capital markets is that you have the ability to create assets that can be composable across the base financial primitive. So as a founder, you can launch and capitalize your technology venture and actually participate in the economics of those assets as they trade. And with the expansion of stablecoins, you now have international payments where a global community can benefit from the power and the staying power of the US dollar, which we believe is both important for the continued expansion of markets in the US, but also for this larger global community.
And speaking of the global community, 2025 has seen a focus on the regulatory landscape. So how is regulatory clarity in key markets actually impacting capital flows?
With the Stablecoin Act being passed, I think has been a tremendous move forward for the industry, and having a supportive SEC who understands that there are well-intentioned entrepreneurs that want to win this industry for the United States, I think has really galvanized this next generation of entrepreneurs to know that they have a green light to participating in building out these technologies. I think what we're hoping for then is that we have clarity passed, though it seems to be stuck in the Senate right now. I think we continue to be optimistic that that will find its way through, but the SEC also seems determined to provide clarity to the market independent of that. But I do think that's the most important aspect to watch at this point, where there's a lot of exuberance about equity tokenization, IP tokenization, derivatives and futures trading on chain. But the laws fundamentally still haven't changed there. And so I think we're looking for Congress to follow through and for this administration to continue to push for this industry, because having the United States set aside from this, I think would be a huge own goal for American entrepreneurship.
And Stephen, while I have you here, you're joining us from Solana Breakpoint. So for our viewers who may not be as familiar, what does infrastructure grade Web3 actually mean when it comes to scalable as well as compliant investments?
So ultimately, founders and enterprises need the ability to tokenize with ease. Metaplex is the largest tokenization platform on Solana. It's been used to create over 20 million tokens, over 900 million NFTs, and our platform allows anyone to immediately access these markets without having to write smart contracts. They can use trusted, audited infrastructure that's been used to support billions of dollars of economic value. For instance, in the last 24 hours, there's been over $4 billion of trading of native assets on chain on Solana, and that represents a fundamental shift from centralized venues to decentralized markets. And ultimately, that provides not just the most efficient market condition, but allows these enterprises and projects to benefit from the economics of these decentralized finance protocols.
And finally, before I let you go, 2026 is right around the corner, and with opportunities come risk as well as challenges. So finally, what barriers do you think remain when it comes to mainstream institutional adoption?
Ultimately, mainstream adoption will flow from there being on-chain price discovery and blockchains becoming the central place where price discovery occurs. And we're starting to see liquidity and volume really move to these systems where it's no longer just a theory, but a reality that anyone can literally plug in with an internet connection and be able to access these markets without permission and without centralization. And so I think what we'll see in 2026 is a continuation of that trend. We'll see the major technology infrastructure that underpins modern civilization decentralizing and being issued through commodity-based tokens. But then we'll also see a move for security tokenization and IP tokenization. I think one of the interesting trends to watch out for is similar to what we've seen here in the UAE and other jurisdictions is, will there be a country, a government that ultimately leans in and allows their equity markets to fully trade on chain without permissions, without KYC? And I think the first mover in that has an incredible advantage and will ultimately be the leader in this next wave of financial innovation.
Well, Stephen, thank you so much for joining us today from Breakpoint. I appreciate your time, and thank you so much for sharing all of your insights.
Thank you, Remy. I appreciate it. Thank you for having me.